Hello, all. Good afternoon, and thank you all for joining us. I'm Joan Woodward, and I'm honored to lead the Travelers Institute, which is the public policy division and educational arm of Travelers. Our Wednesdays with Woodward series was created last year to explore issues impacting our personal and professional lives in these very difficult and uncertain times. We're pleased you're here today, and we hope you'll stay engaged with us. You can join our mailing list by emailing institute@travelers.com or connect with me directly on LinkedIn or watch replays of our past webinars on travelersinstitute.org. We have a number of them there, and they're very useful and practical advice for all of us. So check them out. Before we get started, I'd like to share a disclaimer about today's program. Today's topic is a really important one and one we think about daily here at Travelers, which is the changing landscape of insurance distribution. The pace of change within the insurance industry was accelerating before the pandemic hit and has been impacted significantly, as you all know, by the demands of this new world we find ourselves in. Here to help us make sense of all this in the new world is my very good friend, Patrick Kinney. Patrick is Travelers Executive Vice President for Enterprise Distribution Management. In his role, he leads all of our field teams in delivering the Travelers Promise for customers across our business units. Patrick also has responsibility for marketing and communications for all of business insurance today. He's held positions within Travelers ranging from workers' comp managed care product manager, risk management specialist, to regional vice president for the New England region. He has a unique and broad-ranging perspective on the changing landscape of insurance distribution and will really draw on his 38 years of insurance to help us understand, number one, what is happening in the industry, number two, how the pandemic is shaping current trends, and number three, what will this mean for the future of insurance distribution for all of us? So on a personal level, Patrick is really committed to the communities where we work and we do business. He serves on the board of Hartford Youth Scholars and on the executive committee of Gamma Iota Sigma, a college academic fraternity for students pursuing careers in the insurance industry. He also serves on the board of the Travelers Championship. Everyone knows what that is. Golf coming up soon. The Village for Families and Children and St. Francis Hospital in Hartford, and is a very active supporter in HARC, which provides programs and services to individuals with intellectual disabilities. So I know many of you know Patrick, but I'm going to throw out 3 fun facts about Patrick that you probably don't know. Over the years, he's held 14 different jobs within Travelers. 14, that's a lot. Number 2, he has led the Travelers Community Connections campaign, which is our very large scale across the board, enterprise-wide, 30,000 people, charitable activities. And usually we have a person do that for 1 or 2 years. Patrick has been doing this for 8 years. We won't let him off the hook. So thank you for that, Patrick. And then of course, third and last, and most of you already know this, he's a diehard Eagles fan. So we won't hold that against you, Patrick. Before I hand it over to him, a quick note, we're going to have lots of time for your Q&A at the end of the discussion with Patrick. So use that function bottom middle of your screen. You guys know how to do this by now. Q&A, check anonymously if you don't want me to read your name. Otherwise, I'm going to read your name. And so with that, let me turn it right over to my friend, Patrick. Take it away.
Hi, Joan, and thanks for having me. I really appreciate the opportunity to be here with you. My camera's not coming on. Hold on.
There you go. We got
there
you
go.
now.
All right. It's great seeing you guys, Joan. A couple of things. One, thanks for using my picture from about 20 years ago. So I'm really, appreciating that. As I approach my 60th birthday here, I think we'll be going backwards to the ones where we find I have hair. So really appreciate you doing that. And I appreciate the opening facts. And my friend Bob Jakoski IM'd me right away, just said 14 jobs. Clearly you can't keep one. And could we get HR to do the next session, Joan, on why we had to change 14 times. So thanks, Bob. Love you too. So Joan, thanks for having me and thanks for setting up what we're doing today. And a couple of things. One, we want to just kind of talk to you about what we've been seeing going on with distribution on the retail side for the last 5 to 10 years. I want to talk to you about how that's impacting the industry, where it's leading to, and what we've seen the reaction post-COVID on your side and on our distributor side, on the agency management system side, and on the carrier side. So, distribution has been consolidating my entire career. If you go back when you started, you had, Marsh would be buying J&H. You had multiple mergers. It was all really at the time done by the biggest distributors, and really stayed away from buying up a lot of the really great regional and state specific assets that the distributors had. And so we pulled a slide here to just kind of give you a flavor of how it's changed. One, to show you that mergers and acquisitions are not different, that it's not new. Who's doing it and who's buying has changed. So there's been a rotation in who's buying. There's been a rotation in how it's being funded in terms of public equity, private equity, independent money, banks. But as you look at this exhibit in front of you, 2005, what you see a couple of things is you go back to 2005 and you see that at that time it was really independent, public, some insurance carriers buying, and banks were the major buyer at the time. And you see for about 6 or 7 years, banks are the biggest buyers, and the public companies buying in there are, Brown and Brown and others, Wells Fargo at the time, all buying as you go through. But as you start to see the financial crisis come in 2007, 2008, you start to see the emerger of the private equity-backed firm. And if you just look at the chart in front of you and follow it across the bottom, going from 2007 to 2020, you actually have to add the red bar and the gray bar above it, because AccuSure has been spiked out by these Hales report independently since or back to 2012. So the real PE backed is almost 67% of what's been bought. So that's really interesting. And you also see that the banks have been reducing the number that they're buying, and they also have been a major seller over the last couple of years as the rotation moves into more private equity backed. To give you an example of our data, of the Travelers' top 25 distributors, 11 are PE owned at this point, which is a record we've never experienced. Now that's of the top 25. We actually, if you expand out that, we have more distributors that are PE backed, PE owned than outside of the top 25 as well. So 2020, it continued. It was another record year. And if you really step back and look at it and say, okay, what's it starting to show you? If we move forward. And so this kind of gives you, this exhibit, I think, is a really good way to see, one, who's buying, the rotation and the velocity, and how the deal sizes, there's more deals that they're getting. They had gotten smaller over time, faster to do. So if you go to 2011, when really PE started to come into this space, the most acquisitive broker has been, or acquirer has been, AccuSure. Gallagher has done an amazing job down this path, and you can see, Hub and Assured Partners and Broad Street. Another interesting fact out of Travelers data is when we look at our top 25 distributors, all in countrywide, year end 2020, there is not one independently owned distributor in that listing, and that is a first. And so just to tell you, where you see facts emerging, to be, to even say that there isn't one that's independent is, kind of really interesting. In the top 5 now have more than $1 billion in premium. Put that in context, when I started with the Travelers, as my kids would say back when dinosaurs roamed the earth, the Travelers was in total $2.8 billion in all lines premium. So just to give you scale and how it's changing. So if you look down this list, there's a couple of things that is really interesting inside this list. Is one, you see consistent number of players, But you also see rotation starting to come in as well. New money is coming in. Groups like, Patriot Group, Alera, that has been out there a couple of years, but had started on the employee benefit side, moving over. You're seeing BRP move in, which was a new, a little bit different, came out as an IPO and has done a great job. But you'll see it's starting to rotate a little bit here as well, with other companies and firms entering into the game. But the total number of deals just has continued to go up, which, if you continue to move forward. So this is just a slide that we liked that came out of this, to just again show rotation, but also size and what's starting to happen inside of this. So if you just go back as recently as 2017, one of the biggest acquirers prior to that was Wells Fargo. And by the time you get to 2017, for a lot of issues, Wells Fargo is sold and merged with USI. You see J. Smith Lanier become one of the cornerstone parts of MMA, right? So the MMA franchise is phenomenal, and Jay Smith and his team joined at that point. And you just keep going down here through blue chip properties and entities across the board, and you see the size that they are. You got Key Insurance is sold to USI, so you see the bank rotations, regions moving, and it just keeps getting bigger. And you start to see, as you get further out, that the pieces that are being bought are feeding back to the same buyers. And so the franchises are getting bigger. An agency plant that maybe 10 or 15 years ago we would have said is built around, you always had the Aons and Marshes and the top 10, but a really strong independent agency system, family owned, ESOP owned. We have definitely seen a significant move of that agency into the different buyer models. And I would think that most of our agents would say, who've been part of the buying or the selling here, is that our agents have options of which model they want to work in, that they think and the buyer thinks fits their model the best, right? So, Gallagher has a model and MMA has a model, and there's the aggregator models of SIA. So as a distributor is thinking of buying or selling, one of the biggest things that we've seen over the last years is choice in terms of what kind of model you want to join, and also the footprint and kind of DNA of the firms that are buying are emerging. But one thing that is very clear is it is multinational, it is integrated. The agency plant now is much more diversified in the number of businesses it's in terms of its revenue, health, employee benefits. Mergers have not just been on, the property casualty side. They've been all across the business. They're in the wholesale side. But just to give you a number that we didn't put in the deck, but if you look at 2020, you'd say, okay, how does this impact travelers? Well, in 2020 alone, if we leave out the announced but not completed merger of Aon and Willis, even this far into the acquisitions or the merger and acquisition timeframe, $1 billion of our premium was consolidated in the year 2020. If you bring Aon and Willis into the equation, two fantastic partners, that would be adding somewhere over $1.5 billion. So levels that we still have, never seen before, and it continues to speed up. One of the questions that we've gotten on the call coming in, I think, Joan, was, is consolidation good or bad? Has it been good for the industry or not? I think one of the questions is, how's it been to the industry? And I think my friend Rob Bouvier asked, how's it been for the consumer? So I would say, selfishly, to this point, mergers and acquisitions and consolidations on the agency side has been net positive for the travelers. It has been more than net positive. We have been a beneficiary of it. We also get the question of, what do we feel about it? It's not my choice. We don't have, we have to find out how to distribute and bring our surplus and our product offering to you however you're going to be organized and come down the path. And so we've long ago gotten over the idea of we can control it or do something with it. We fundamentally say, no, we want to be the best partner, however you're going to organize yourself. And so, I think, Joan, we had that question. And then Rob, the second question on related, have we seen the benefit to the consumer yet? That's a fantastic question. And I think as the race for efficiency, the investment in efficiency, and as both of us reduce cost in this, I think it's really hard to believe that those benefits will accrue to you, either you or us exclusively, and really hard to believe that it would not accrue significantly to the customer, and that it would be in our interest, both of us, to be continuing to be able to bring the product down, the price down, but also to be able to change the equation of between how much loss is covered on a dollar premium and how much expense. And I think we've all seen VJ Dowling's analysis that he thinks over time the industry will go from 65-35 to 75-25. We're not calling where that goes, but to your question, Rob, we do think that anytime anything gets more efficient, if it doesn't help the consumer, it ultimately probably isn't the best thing for either side. So moving forward. So that's kind of just the landscape of what was, what's been going on with distribution. And we'll take other questions on that. Pre-COVID, we saw, consolidation. We saw everybody looking and bringing their pieces together and seeing what they should buy and where they should buy. We saw a lot of experimentation with different technology, digitalization of the business, but kind of, toe dipping. Really, people kind of looking at it. The travelers had been spending a lot of time on what we were calling the agent of the future and the broker of the future. And in those conversations, we had a lot of receptive conversation from our distributors, but you also could see that each side was trying to figure out where it was going to go. And I think most sides felt, well, we got time to figure this out. And we're going to figure out how to make this industry have less friction. We're going to make it more efficient. Travelers kept investing down that path, and we would say here are what we see coming out of COVID. And I'm giving you general answers. If my friend Michael Klein or Lori Tateman went on, they'd give you specifics for personal insurance, or if Greg, T, and Scott or Miles are on, they'd tell you, how it might be a little nuisance in the business insurance, or Tom and James in bond, a little different there. But these are global trends that we see have really happened post March 13th. We went home on the 16th. So number one, customer-centric design now is critical to future success. The process is exposed across all of it, but your process, our process, the customer's access to both of our processes, the connectedness of those processes, the cost of those processes, it's now all on the table. How does it work? How do I get to it? I'm sure you guys have seen, we've seen explosion in the access to our websites, into MyT. We've seen significant more use by you guys of our distributors of all of our digital assets. And so customer-centric design around you, our partner, and around the customer, between you and us, we believe is critical, and the customer is no longer going to tolerate an inefficient process. Digitalization and the frictionless trade now are a high priority. We can no longer tolerate an inefficient way of trading data back and forth. We've seen a real move in this arena in the last number of months, and you'll see in a minute, I'll show you, there's been some high profile acquisitions on the agency part down the path of digitization on the trade side. All of us have had to, we're 1 year in this now, and all of us are talking about how you've had to adapt the sales and marketing process to compete in this virtual world. We've seen agents do extremely well in this world. we've heard a lot of conversation about how you're able to bring more resources to the sale because you don't have to travel there. You can really, when you get a customer, you can really bring your value proposition to bear even better than you might have, or all of us might have thought in a virtual world. But these services or skills are evolving as we speak. One of the most interesting things we see, we had ramped up as travelers, in addition to all the great work that our businesses do with the agency management systems, on the day-to-day, keeping the trains running with each other and you. 2.5 years ago or so, under Bill Devine's leadership with Bob Jenkins and a number of our people internally, we started really ramping up our engagement with the agency management systems, and felt that agency management systems and the relationship with you was going to change drastically because of your size. And as you got bigger and bigger, you would become more the person that defined how the process should work to support you than the other way around. And so we are seeing and have seen post-COVID a lot of investment, interest, and much more adoption coming in on the agency management systems than we've seen in years. And we're seeing the problem of connection and integration being solved not only for small commercial, which has historically been the industry's focus, but in essence for all information that trades back and forth between us and our distribution partners. We think that's game changing. And we've also, so much work has been done on the value chain and what it costs to own things and what's the right thing to buy and what's the right thing to build. The industry's mindset has changed on that significantly over the last 5 years. And so now much more open to looking at pre-COVID InsurTech solutions to solve repeatable problems in the process. It's really moved now to all of us considering how do you bring this into the process. So all of us considering how we bring this into the process. So if we move forward. All right, so I said the times are changing, and just to give you an example of what's been happening, how people are thinking about this, how COVID has changed some of this, just on this piece of paper, just absorb all the different things that are happening, but all the things that if you said to yourself, if I had a time machine and I went back 5 years, would this have been what you would have saw on the page? And would you have predicted this going backward, that this would be where we evolved? So Brown & Brown acquires CoverHound and their cyber policy, right? Really, really interesting acquisition will change the way that some parts of our business has to interact or will interact with Brown & Brown through CoverHound. So now technology coming in to deal with access to markets, integration, seamless process. And CoverWallet, another operation coming together that brings the power of a known brand that has a huge platform that it can support, coming to a technology and bringing the ability to bring digitization to that process. And you can continue around this from anything from Insurion, moving faster and faster towards creating comparative rating technology for BI or for business insurance or commercial insurance, to just the continued movement around in the agency management systems, from Applied to acquire Indio. I think Applied got recapitalized, or Vertafore did. One got a new president. The moving around in there has been intense. And then you saw one of the newest things that got announced before CIAB the last time it was in person. So that would have been 19, I guess, was the last time we're there. BTV got announced at that time. It's BrokerTech Ventures is a really innovative partnership between 10 or so of the top independent regional distributors and BrokerTech to look at technology that is coming into the industry to see how it should or could help those partners and how they should adopt it. They then also have decisions of what they fund as kind of a tech startup or incubator. And that has led to things like high wing, which is a different way for the distributor to trade with the carrier to pull data to be developed. So you could spend hours on this slide trying to understand exactly what it means, where it's going, and how does it change the future of distribution and relationships between the distributor and the carrier. But I think all of it continues to point to it needs to be API enabled, it needs to be integrated, it needs to be efficient and quick, it needs to be repeatable, and we will need to be able to manufacture the way that our distributor is going to want to sell it in terms of whether or not it's online, digital type ways, in person. We will both continue to have to iterate. If we roll forward one more. So as we look at this, just to give you a, and Joan said I could have a shameless plug at some point, so I'm going to go there at this moment, Joan. So as I opened was said that we've been innovating and really looking at it, had a lot of you in to do innovation tours with us, spent a lot of time on the phone with you, sharing our ideas, have you in the Hartford. If you look on the left with the umbrella, you know, what we think we all need going forward are digital applications, appetite APIs, you know, an API library where we can connect things with you, and you can come in and, you know, pull it down and connect it to your system. Real-time quote indications, we're bringing that up, but we brought that up in workers' compensation for small commercial. We rolled out a new product during COVID, developed it and rolled it out in less than 10 weeks, which is the ability to give our agents loss data on their claim side, which would be 5 years of data. I think it's about 84 fields. We rolled it out, redesigned the legal process, redesigned the process to integrate the data with our agents and share it with them. And at this point, we have 13 of the top 25 of our top 25 distributors have already signed the contract, integrated the process, and taken down the data. We've actually gotten this process so efficient that we have been able to demonstrate it in the morning, send the contract over after the demonstration, execute the contract, and deliver the information that day. So just the way that Agile and the data and the tools are getting better. We are also designing e-submission. We want to be able to take information from you, however you want to send it to us. We want to be able to read it and load it in our systems and feed it back to you. We both got to get away from rekeying, re-efforts, you know, simplify the process. And then what we're doing, which is maybe different than we would have done, or not maybe, definitely different than we would have done as an industry, you know, 5 years ago, is instead of us trying to figure out, you know, what do we have to do to build it and all the pieces, which could take 6 years and $60 million, we looked at it and said, what do we need to own? What don't we need to own? What's a utility? What's not a utility? What adds value? What doesn't? And have then spent, you know, the last couple of years with our partners looking at all these different companies and technologies in integration and determining how they snap into the process, how they bring efficiency, how they reduce costs for both of us as we keep pushing them and the partners towards the answer that we think will provide the lowest cost of doing business with travelers, the most access to the information, the fastest process, and the most informed. And so we believe over time that you will make value judgments on how efficient we are to trade with, what the yield you get from us, what's the time of that trade, how long does it take a submission to go through the goose, how long does it take to get a policy issued. We believe with the algorithms and the information that our distributors are developing, at some point you will have an opinion that says Travelers is 10%, 20% cheaper to do business in total, not just at the deal level than its next closest competitor. We feel we need to do that to be able to get to that point where more of the dollar covers loss costs without impacting your margin or ours, but helping all of us hopefully sell more insurance more efficiently. So Joan, that's kind of where, I am, if you'd like. And I
Okay.
think there's another slide, but I'll stop here. Let me go one more, Joan, and then I'll
Sure.
roll it forward. So if you just think about this from the picture of how we're thinking about it, when I said we didn't come at this from the standard traditional solve the small commercial integration problem, which a lot of us on this phone have spent, a large part of our careers talking about. We asked and said, what's the problem? How big is the problem? What do you need at each phase in the problem? So what's the problem for small commercial? You want speed, you want accuracy, you want quote to issue, and you want the process to be seamless, to connect it to service centers, APIs for certificates, understanding where appetite is, just really making it as smooth and as frictionless as possible. As you move up into the middle and into large, what you have to consume or you have to send to us changes. More need for integration capabilities like Broker Buddha or Indio, more need for e-submission capabilities that take the data from you, bring it to us, we bring you back. We take it from you, we bring it back to you in a way that you can consume it. We've been doing a lot of work with our top distributors on data integration, and 7 of our top 10 share data with us today, and where we can integrate the entire process of what's in our appetite, what our partner writes, what we would like to write in addition, and how we bring a quote to the table. We're also in our world starting to integrate stuff around Salesforce as a display vehicle, and are in conversations with distributors on this line who want to see if we can connect together through Salesforce and look at different ways to integrate with Salesforce. So there's a lot of goodness in Salesforce to us from the standpoint of things that sound simple but are maddeningly difficult. The right email address for the right issue inside the right agency. You'd think that'd be easy. It's not. And so as we're going down these paths, lots of things are getting solved. Producer codes are being shut down. We're figuring out how to make them go away. We're cleaning up the experience. And at the end of the day, we want to use all of it and all these capabilities to make us the fastest, most efficient way to exchange the information, understand the appetite, bring the best people to bear, bring our best price, and risk control and services to bear on that risk, and get both of us out of the processing business, you in the brokering business and us in the underwriting business. And that's kind of where we want to go. And then I have, if you want to just roll forward one more. So what are our closing thoughts? There's just no doubt consolidation is going to continue. You see lots of different thoughts on this. There's a school of thought that says it will continue but move down in size of agency because of what is left, and that could begin to impact cluster and aggregator organizations as the anchor stores in those organizations begin to sell. And we have seen some of that. We do believe with 11 of the top 25 owned by private equity that somewhere there's an exit strategy. We also believe that exit strategy, or just the need to continue to consolidate, will start to cause more mergers akin to the Aon and Willis merger that's going on now. The advancing digital capabilities, it's just accelerating. Every day the conversation, I think we're both learning what we need, getting better at it, but that drive is never going to go away. We're going to have to master it, going to have to get a lot better at it. And, we can no longer make money on unnecessary complexity and the process being difficult to understand. We've got to make the process of getting to the surplus not the discussion point. And that's what we need to use digital for. And I think we're both now in a relentless cycle of improving customer experience across everything we do. And that that's not going away. I think I've heard from a lot of you that's saying the virtual has allowed you to separate your capabilities at the point of sale. I think now our customer experience, yours, ours, the integrated parts of it, all of it will now be under and should be under much more scrutiny and will be held to account to make it better as an industry, which will be great for all of us. So, Joan, I thank you for your time and I'd love to take your questions.
Yeah, well, that was a lot. And thank you, Patrick. Really, really thoughtful and kind of interesting, given you've been in the industry so long, to see these trends emerge and kind of thinking about it for the future. So, all right, folks, this is your time to ask Patrick your question. You can do it anonymously if you want, or attach your name to it. It's that Q&A function at the bottom of your screen. So just type it in and I'll get to as many as we can. We'll do kind of a rapid fire at the end with Patrick. But first, Patrick, I want to dig a little deeper on, you talked about trends say over the last 5 years. COVID hit March 16th. We all took our laptops home for what we thought would be a few weeks or a few months, maybe in our wildest dreams, staying home for a few months. People couldn't even imagine it. So here we are almost a year later. What are the different impacts of COVID kind of by agency size? So you talked about the pace of change and the consolidation. So talk about the small, the medium, and the large brokers and the agents out there. How has COVID affected kind of what they're seeing?
Yeah, so I'll take it in the order you asked, depending on, small, truly independent, small, connected with a partner, an aggregator partner, middle and large. So I think across everyone, COVID is focused each of us on our businesses and every aspect of our process. So no matter what size agency you are, Joan, every part of the process got exposed. So you could be a 5-person shop selling personal insurance for us and small commercial, and you've had to adjust how you're getting to that customer, what they can see, how you're doing certificates, how you're connecting. You might have sold one way, now you're digital. So it has impacted everyone. And I think what I've also seen is the impact. One of the major things I've seen is focus. That this industry has talked about the issue of data integration and sharing and reducing friction. Like I said, all the time I've been in it, it's now really, really doing something about it. And if I look at the projects we have underway with our top distributors, it is stunning how far it's moved from March 16th to now. And that, Joan, is everything with how do you get marketing materials? Like I said, our agent centric tool in PI, or agent toolkit in PI, has become its usage is up like 300% because it's there to help that agent who is combining our resources and those resources to bring a total picture of that agency. And then on the highest end, everybody again is still working on the same problem. We might get to bigger size partners, but the problem is the same, and everybody is attacking it, I think, much better and adjusting faster. And I also think that as strange as this might seem, Joan, and I think a lot of us have felt this in parts of the industry, the fact that we're home, I've never felt more connected to my distribution partners than I do right now. And I think our field folks would tell you that, because our partners have been available, they've been interested, they've been focused, we've been focused. You can do more of them, you can bring more people in, you can have deeper conversations. So I think all the negatives of not being around people, not the camaraderie, not learning the culture, are still there, and we got to overcome them. But in some ways, I think we've never had better connection from our field folks, AEs, through our agents in the toughest market in my career, as well as the toughest environment any of us have ever worked in our lives.
Yeah, Patrick, that's really a good point, because I think for the first few months, all of us were trying to figure out, oh, do I really need to do that webinar or Zoom call? And now it's just second nature to us. And so the silver lining, as you point out, for our agents and distribution partners, is that connectivity that we travelers really, really, really want to embed ourselves in their
Right.
agencies and in their thought process. And so that has, I think, been a silver lining for us in this pandemic.
And I think what it's done is sharpen the focus on, what you should be investing in, because, we've seen a lot of things where like we thought that was important. And then, when after COVID, you're like, well, we haven't touched that for 120 days. Can't be important. Let's not do it. Let's move on. And I do think I've seen our agents do this and us, whether or not we all knew we were going to an agile work environment. COVID has forced us all into an agile work environment where we have to work integrated, connected all day long. Very, in some ways, different than what we think happens at the office.
Right. So agile is just a fancy word for doing what we've been
Connected,
doing in the last, right?
connected. Yeah.
Yeah, connected to each other. Is that different? So one of my questions is that different? You mentioned PI and the tools that agents need to be successful kind of in the PI world. Is it different for commercial insurance and in BI? What are we seeing kind of there?
So personal insurance and our partners just do a phenomenal job bringing the right tools to our agent to help sell those products. In the business insurance side, we work with the agent based on size of product. So we have similar tools from our select partners. We're ramping up more of those digital tools. What I talked about on the last exhibit, second to last exhibit, Joan, about e-submission, all the loss data and things we're bringing to the table, that's coming in more on the BI and BSI side of the house as opposed to PI. So we're trying to make the interface and interaction for our agent who focuses on small, or our agents who have small and a lot of it, easier and more efficient and allow a lot more self-service. So they're both headed in the same direction, and we feel good about where they are.
Great. Okay, now it's time for all of our wonderful questions coming in from the audience. We have a ton, so we're going to try to do a little bit of a rapid fire, Patrick, with some of these. So this is a really interesting one coming in from Frank Doyle. Do you see millennials or Gen Zs moving towards agents as they gain wealth? I mean, we talk all the time about talent's important in this industry, and not only attracting good talent, but retaining them because they have
Yep.
options these days, right? And so
Sure.
how are you seeing millennials moving into our industry?
So I'll take that question two ways. So the first part is, do I think as millennials grow, acquire more assets, will they begin to think more about a personal agent relationship than maybe buying it on, seeing it as purely a transaction? We do believe that. I mean, that's been our bet and conversation that we've had with our agents since, forever about, we believe they will go up, and as they earn more assets or own more assets, that they will come and lean on our independent agent. That's an assumption made on what the technology was 5 years ago, and clearly the technology can always change. In terms of people joining this business, or the agent side of the business, I think this is a fantastic industry. A lot of us didn't start out wanting to be in it, and once you get in it, you really you find out that there's unbelievable facets to it. Joan, I think it's one of those times with the economy in a tough spot. We're able to recruit a little bit more right now. More people are interested in talking about it, and I think our distributors have more concentrated needs now because their own, now they're so big, they'll be hiring in more bulk. I think we are going to and have to attract that age group into our business to work with us and stay with us and become the backbone of the future. And I think I think we're doing that. And I think this summer Travelers has over 400 interns that come in for the summer and people. So we're doing it. We know many distributors on this phone are doing it, and we need to keep doing it.
Great. And you wanted to spend a minute in talk about attracting, females to our industry. I know our CEO, Alan Schnitzer, stood up a program for the whole industry called She Travels. You want to spend a minute on that and why that's important to us?
Yeah, sure. So, She Travels is an initiative that now feels like, I think Joan and I made 21 trips across the country as we did this in 21 regions. And really, it came out of Alan at TLC, which for those you don't know is the Travelers Leadership Conference, and being amazingly self-reflective as he is as a leader, and looking at our management team for 3 days on stage in front of our top distributors, and it was all white men. And so the conversation became, are we doing enough? How do we do it? What do we think about it? Can we help spark more conversation on this topic across the industry? And that's how we got started on this, Joan, as you know, and it's expanded. It continues to expand about into inclusion of all types. And so we are committed. We, as a company, do I think a really good job of hiring women, promoting women, moving, getting people to come in. A lot of women hired into the industry, but it's not enough. It's not wide enough. We don't have people enough of equality up and down the organizations in this industry of who's in the right spot. So we're, who's getting the right opportunity. So we're pulling for it and pushing hard. And Joan, you did a phenomenal session yesterday that was incredibly well attended on She Travels, and maybe you want to spend a second talking about that.
Well, I was going to say, for the agents out there on the line, we have a lot of resources for you as well. So for women and men on our She Travels LinkedIn page. So join that group, anyone out there. And there's a lot of really good resources in terms of attracting, retaining that talent, and diverse talent, not just women, but diverse talent in your agency. So check it out. All right, back to insurance for a second here. So this coming in from Bill Daly, Brown & Brown, Beecher and Carlson. Patrick, how do we accelerate the use of technology to work better together on a transactional basis? So renewals, cross sells, quote to bind. He wants to know about that.
Yeah, sure. Hey, Bill, thanks for the question. I think if you go back to breaking down the trades by size and technology, Bill, we're a huge proponent of driving our small business to an AFI issue type basis, where you can come in, you can quote, you can rate, quote, and then connect to our systems to issue. When we talk about e-submission, Bill, it's exactly what you're asking for. There is, take the data right out of your AMS system, right off your record forms, take it right out of the spreadsheets that you might have, and ingest it right into the process so we can respond faster. One of the other parts, Bill, is taking it in the way that we'd like to, or are in e-submission, other tools up front. We can then route it to quote more lines and move it around in our system. So we're able to run it through appetite, an appetite process, and then say, okay, we should be quoting 5 lines on this, not the 3 that came in. Let's call back and offer to quote the inland marine, or we want to quote the cargo. So being able to get the data in up front in a standardized way where we can move it, we can run it up against tools that we have like Certified Business or new certified agent tools. We can run it up against that and say, there are 6 lines we want to write on this. Come back to our friends and quote 6, which would be 3 in addition to we write now. So we think technology is going to drive that. Our middle market partners and our business insurance partners have been building out a proposal, one proposal that our distributors will now be getting, so we can pull together, an inland, an ocean, a comp, a GL, a property, an umbrella quote all together, and bring that to you in a much more seamless manner than we have in the past. So we're examining every account that comes in to see what are the line opportunities. Our goal is to sell more lines to more customers on new and renewal, and we're building the processes to mechanize that so we can move it around our shop and get the right resource and the right process to the table on each individual transaction.
Okay, Patrick, rapid fire. You only
Okay.
get a 30
1 second.
Rapid fire. Here we go.
Here you go.
Jack Reich wants to know, since money has been cheap, if interest rates were to go up, you see a sell-off of some of the P&Es to a more traditional brokers, could it adversely affect the distribution system, and could it slow down the M&A market? Good question.
Yeah. That's like asking me if I think the Eagles are going to win. I always say yes. And Jack, I'm not real good at predicting stuff. I would say that for years, the conversation has been when interest rates go up and the debt, the debt that's been used to get into this, will it impact the, the ability to buy? I think the answer to that is yes. We've thought long and hard about what the impact to us would be if people, had to sell because interest rates were going up, or if it went to private equity to public. We can't see the downside for us, and that's being selfish. They may trade at lower levels. There may be issues that impact their valuations, but hard to see what ultimately would be the, it wouldn't hurt, it wouldn't be nice, but I don't know if it hurts us if that's what happens.
Okay, great. Next question from Cody Benton. Is there any concern that large brokerages will begin to underwrite their own clients and begin to operate in some capacity as an insurance carrier? Good question. In short, will some of our distribution partners begin to become direct competitors?
Well, yeah, that's always a possibility, Joan, and I think that's an option that everybody has. And we get asked that question a lot, and my answer all the time, in no way, shape, or form being flip or a wise guy, which is, hey, I'll trade you your 32 for our 8 ROE. And so, we've not proven that you can make a lot of money taking risk on this business. And our brokers and agents have proven they're amazingly effective at making money in theirs. Will it happen? Sure, it will. Risk takers have been coming in and out of this forever, Joan. We will have to show what our value is. We will have to be able to be there for our distributor byline on each transaction, how they want to trade into the future.
Okay. Next question from Russell Brown. What are 1 or 2 key actions should frontline underwriters take to best handle these distributor changes? It's a great question.
Yeah, a really interesting question, because I turn it around a little bit to our frontline underwriter and say, does the fact that X distributor that was on that corner yesterday in, Tuscaloosa and is now owned by another firm, does that change the nature of the trade or the transaction? I haven't seen a lot of that in the process, where what we've seen is stronger relationships, ability to bring more resources to that distributor, more technology, more capability, more information. So I would say we keep working as hard as we can, because that distributor and those distributors are part of what our future is going to be, Joan. And I think that when our agencies are bought or join other agencies, it always seems to be a cumulative positive, accretive, not negative. And I think it helps make both of us more efficient and effective.
All right, great. Next question is about Travelers. So you opened the kimono a little bit. People want to know more here. Travelers' top 25 distributors include 11 PE-backed brokers, as you said. You also mentioned not one are independently owned as of the 2020 list that we just looked at. What type are the other 14?
They range anything from aggregators. So there's public entity. I mean, public, like publicly traded, Gallagher, Marsh, Aon. We look at aggregators in terms of our terms, like our friends in SIA, a Keystone, and Iroquois. We have a tremendous number of friends and great partners there. And then we have payroll companies, Joan, that we do some workers' compensation business with. But like I said, it's PE, public entity, aggregators, payroll companies.
Okay. This is a crystal ball question for 10 years, 15 years down the road, which I know you'll still be at Travelers, and so will I, Patrick. So Bill Stone, our friend Bill Stone says, this is just terrific, want more of it. Given the history and acceleration of COVID has caused for frictionless sharing of data, reducing rekeying, etc., where else do you think we need to be and what's coming in the next 10 to 15 years as you do strategic planning at Travelers?
Well, that's a great question. And so I'd like to say that we're thinking out that far. Um, I'd say it's changing so fast. We're at about 5 years out in terms of what we think is happening. I think if you said to us, what's the number one thing? It keeps coming back to APIs, digitalization connection, APIs, digitalization connection, remove steps, remove steps. Why do we ask 42 underwriting questions? Because we lost money on the 42nd question 30 years ago on a Tuesday in New York in the rain. So we have to ask that question, right? So I think AI will come in to tell us which questions to ask. I think you guys will be incredibly more efficient in trading the blocks of risk. They still will probably go down an individual risk category, but I think our distributors are building data and information and beginning to apply AI and others that you will actually come to the market with an idea of what you want to do before we have an idea as the carrier. So I see AI coming in big. I see us learning how to to understand and underwrite and quantify risk without asking as many questions, without, by using the data to be more predictive. I think if I look out further, I think the underwriting jobs, the brokerage jobs of the future change. I think they're much more consultative. They're much more into what that risk does and how it does it and how you feed it. But I think it changes. If I were to look back 10 years from now, I'll say whoever missed the arms race, who missed the connection of the data and the value of the data and lost track of the value chain and where it's going, will be the ones that lose out 10 years from now. And what it's going to take from here to now to get there is evolving, but I think it's going to be speed, accuracy, and precision, and talent that we're all going to need to succeed.
Great. I'm really glad you brought up AI and technology and big data. And these can be scary words, right, for a mom and pop shop or even a small mid-sized broker. But I'm going to host our Chief Technology Officer in a month or so here on a Wednesday webinar, Mojgan Lefebvre, who is just dynamic and incredibly thoughtful when it comes to big data, AI for carriers and distributors. So she's going to join me on a webinar just like this in a few weeks. So we'll get that invitation out to everyone. But it's another question here on that API question from Kevin Brandt. This is great, Patrick. Please do it again. Are the API libraries and data access available to your mom and pop partners or only to your largest distributors right now?
And they're available to anyone. We put it in the API library. My understanding that Jenkins and those guys might be on, but there's no size limitation. If you can use it and we have it available, you can take it. Yeah, Bob just IN'd me. Yes. So I didn't make that one. I didn't make that one up, Joan.
Okay, good. And we're going to end on a note here.
Can I take Kyle's question for a second on the bottom?
Yeah. Oh,
I
please
see
do.
Kyle's.
Kyle,
hey,
yeah.
Kyle.
That's where I was going to end. So you and I had great minds. So Kyle Lingstedt, I'm sure I'm saying that wrong. Apologies, Kyle. It seems that our youngest colleagues are struggling the most with the lack of ability to network and learn in a face-to-face environment. Are we seeing the same at Travelers? And I'm going to add my own question, Patrick, which is, talking about when we're all going to be back to the offices, because I know a lot of the smaller brokerages and others are kind of following some of the bigger companies' leads in terms of when we send our workforce back. And when are we going to be able to have dinner and lunch and eat really big shrimp with you again, Patrick?
I know. I mean, shrimp futures have dropped amazingly since we've not been able to buy them for our agents. So let me go to Kyle's question. Yeah, Kyle, I worry a lot, and I know our management team all the time is worried about this lack of ability to network and that people begin to believe this is normal. One of the things that, we talk about and I see is Zoom, however the protocol of Zoom or whatever you want to call it is evolving. It is not evolved to chit chat. It is not evolved to ask Joan how she's feeling. No Zoom meeting starts late and none end early. And so the entire, hey, what did you learn there when you're walking down the hallway? And, I saw how you reacted with your face. You can't really read body language on Zoom. So yeah, we're very concerned about it, and we are working on our way of how we get people back. We've ramped up doing virtual office visits, training sessions with people, opening up more of our management to our folks to talk about them, to talk about what's going on. But there's major parts of this business that you just have to learn face to face, and you have to see how it's done. And I hope that our people will understand, not ours, just all of us, is how important that is, and not look at and offset the financial benefit they're getting now from not having to commute into downtown Seattle when they're not going into New York, and they see that instant life balance as we're sacrificing the face-to-face communication. And I think that would be detrimental for us as humans, but I think will hurt both of our businesses. And I think we need to get people back. I actually believe re-entry will be harder than people think. We all hated this 4 or 5 months ago. I'm not wildly thrilled with it, but it's wearing on me. I'm starting to get used to it, and I don't know where that takes you over time. But I think if we don't get back to interacting with each other, I think it's detrimental to us as humans and the business. So, Joan, I appreciate your time. I appreciate what you do with these, Joan. It's you should be commended on how in the pandemic, I think Joan was our first case because she was going to be going to Seattle in like March of last year. And so we had to figure out how long and where we were going. But Joan, you pivoted this, you moved it on to virtual, and the number of people you're touching every time is fantastic. The audience have been great. Thanks for doing this, Joan, and thanks for having me.
Patrick, thanks so much for coming on. And we're going to have you back later this year if you're so agreeable. We've got a ton of notes here from agents saying this is particularly valuable to them. So we'll have you back on.
I'll be putting out my book, The Fat Bald Insurance Guy's Tips on Insurance. So,
okay.
All right.
We'll buy them and we'll ship them out to everyone, Patrick.
Thanks, Joan. Stay safe, everybody.
And thanks for your leadership. I just have a quick note at the end of the program here. Thanks for your leadership, Patrick. You're not just a leader at Travelers, you're a leader in the industry, and we all recognize that. That's why we had so many people sign up for today's session. So thank you for that and all of your charitable work. That's incredibly important. Look, folks, we have a couple webinars coming up on your screen. You're going to see March 3rd. I'm going to interview one of the safety experts at the Insurance Institute for the Highway Safety. We're going to look at the top 10 safest cars and trucks and SUVs out there, hear what they're doing with autonomous vehicles. So crash and learn, please be with me on March 3rd. And then on March 17th, another important area is recruiting, which is we're going to talk about recruiting military spouses. We have found them to be incredibly good employees and loyal employees for us. So we're going to share our tips and hear from experts in the field. Thank you again for joining us. If you want to learn any more about our Wednesday sessions, go to travelersinstitute.org. And stay safe, my friends. Wear your masks and get your vaccines when you can. Take care.
Thanks, everybody. Take care. Be safe. Thanks, Joan.
Thank you, Patrick.